Good evening, everyone. I'm Sai from Kirin Advisors. I welcome you all to the virtual roadshow of Neochem Biosolutions Limited. Today, we'll provide a brief overview of the company and its innovative business model. Neochem Biosolutions Limited is a specialty performance chemical manufacturing company catering to multiple industries, including textile and garment washing, home and personal care, institutional and industrial cleaners, water treatment, paints and coatings, paper and pulp, construction, rubber, and dyes and pigments. So, from the management team, we have Mr. Swapnil Makati, the managing director and promoter. Welcome to the roadshow, sir. We have Mr. Pradeep R. Solanki, the chief financial officer. Welcome to the roadshow, sir. From Vivro Financial Services Limited, we have Mr. Roshan Vaishnav, the director. Welcome, sir. We have Mr. Jayesh Vitlani, the senior vice president. Welcome, sir. We have Mr. Tushar Ashar, the vice president. Yeah, welcome. So now we will play a short AV of the company.
Neochem Biosolutions Limited is a specialty performance chemical manufacturer with over 4 decades of experience and a diverse portfolio of more than 350 customized formulations across 4 primary product segments: polymers, surfactants, silicones, and esters, and bio-based sustainable solutions. The company operates its manufacturing facility at Moraiya, Ahmedabad, with an installed capacity of 22,000 metric tons per annum, spread over a total area of 6,763 square meters, and a warehouse capacity of 1,350 metric tons. Our facility is equipped to handle multiple chemistries which support intermediate batch manufacturing and formulation processes. Our plant is equipped with modern process systems, pilot reactors, in-house laboratories, and a zero liquid discharge system, ensuring strict environmental and safety compliance. Our in-house R&D and product application development laboratory is equipped with advanced testing and formulation infrastructure and operated by a team of qualified professionals. The company develops formulations based on customer-specific application requirements. Our facilities are certified with ISO 9001, 14001, and 45001, while our products carry GOTS 7.0 and ZDHC Level 3 certifications, reflecting our commitment to environmental stewardship and quality excellence. Our textile auxiliaries portfolio spans every stage of fabric and garment processing, from pre-treatment and dyeing to finishing, printing, and coating. In home and personal care, we offer advanced surfactants, silicones, and rheological modifiers used in detergents, shampoos, and cleaning agents. Our water treatment solutions include cutting-edge anti-scalants, dispersants, and decolorants. For paints and coatings, we provide acrylic emulsions, anti-foams, and performance additives that ensure consistency and protection. We sell our products through a distribution network of more than 50 distributors across India and have catered to over 240 customers in fiscal year 2025. During the same fiscal, we generated 8.61% of our revenue from exports across 12 countries, including Bangladesh, Australia, Vietnam, Egypt, Singapore, Thailand, Indonesia, Uzbekistan, Canada, Turkey, Ukraine, and South Korea. The company has evolved into a professionally managed public limited entity under the leadership of our board and promoters. Through their efforts and an experienced management team, the company has achieved a growth in total revenue from operations at a CAGR of 32.16% from fiscal 2023 to fiscal 2025. Having established a strong foundation in the specialty performance chemical industry, we intend to strengthen our presence across industries and expand our geographical presence. Strengthen the presence across end-user application industries to enhance our position as a comprehensive specialty performance chemical solutions provider. Develop innovative performance chemistries and sustainable solutions to meet diverse customer requirements while meeting environmental and safety expectations of stakeholders. Growing our geographical reach in key international markets. Leverage existing strategic collaborations and partnerships to integrate advanced chemical technologies into our product portfolio with niche, high-value formulations. With a legacy built on trust, innovation, and responsible chemistry, Neochem Biosolutions Limited continues to advance as a specialty performance chemical manufacturer, enabling growth for a sustainable tomorrow.
Okay. So with that, now I would like to hand over the floor to Swapnil sir so that he can tell us the journey of the company.
Thank you,
Over to
Sai.
you.
Yeah, thank you, Sai. So I would like to thank Kirin for organizing this, virtual IPO meet, so that we can communicate what exactly we are doing to the viewers. So I'm Swapnil R. Makati, the Managing Director of Neochem Biosolutions Limited. So to give you a brief on what exactly Neochem does, Neochem is a specialty performance chemical company which is purely into a formulation based products which are applied to various industries like textiles, garment, home and personal care, paint and coatings, water treatment, polymers. So the journey of the company began in 1978 as a partnership firm, and so far, our journey of more than 45 years has led to so much of an experience in developing few products. But predominantly till 2022, we were only present in textile industry, taking a major strategic shift of converting Neochem into a performance chemical company. We took four key chemistries out of this textile chemistries, and made a lot of formulations which are now being applied or used by multiple industries. So the viewers can imagine what is the growth trajectory that Neochem would like to move over a medium to long term timeline, considering that the industries that we cover are predominantly producing those products which are going for personal consumption, in terms of textile apparels, personal care products, home care products, or paint products. So this is a brief, guidelines that I would give, but I would like to go through a presentation which will give a fairly detailed view on exactly what we do.
Sure, sir. Let's start with the company presentation.
Sure. So as I said that Neochem got established in 1978 as a partnership firm. Until 2022, it was out and out a textile chemical company. But taking four key strong chemistries out of the textile basket, namely polymers, surfactants, silicons, and bio-based esters, and making over 350 plus formulations. Today, we are catering to other industries like home and personal care, institutional cleaners, water treatment polymers, paint and coating additives, few products for paper and pulp industries, and couple of products for construction and rubber industries, and dyes and pigment additives. We are actually located on the national near the national highway between Ahmedabad and Rajkot at a location called Moraiya, where our plant is equipped with production capacity of 22,000 metric tons per annum, which we got installed in 2023. Prior to that, we were running at around 8,000 tons per annum. The plant today is backed up by three important process certification like ISO 9001, 14,001, and 45,001. And majority of our products fall into the eco-friendly category, and we have those products certified by GOTS version 7 for organic cotton related products, and ZDHC level 3, which has more than 300 plus formulations for considering the effluent load coming out of the industry. Understanding the requirement of creating product brands rather than just focusing on company as a brand, Neochem has 40 plus registered trademarks in its name, and it's promoting 15 flagship brands under key product categories. We are an out and out manufacturing company, but the strong focus of our product formulation is derived from our labs. In all, we have three labs: R&D lab, QA/QC lab, and application research center. Our key strength is in the applied chemistry, and that's the reason that R&D becomes a very, very important feature of our process. To cater to our customers in all major territories, we have 50 plus authorized distributors spread across India. Other than that, in last 3 years, we have arrived at a stage that we are catering to our customers in 12 different countries, across the world. As we are in the business of formulations, water becomes a very important raw material for us, and that also allows us to maintain a very ecological way of manufacturing. And that is the reason Neochem is a zero liquid discharge facility. Not a single drop of water goes out of our facility, which is a very, very tough task for a chemical company to achieve. Next slide. Yeah. So viewers have already got, to see through the video on exactly how our plant looks like. But again, to quickly sum it up, we are located near Moraiya, around 7,000 square meters of land area, of which 2,000 is still, available free land for, further expansion as required. Capex done in 2023 as a base year. So we have arrived from 25% capacity utilization to 42% capacity utilization in FY25. This year we are, in the H1 itself, we have done around 23% of the annualized capacity utilization. So viewers can imagine what is the run rate at which we are going this year. Our plant has 11 reactors. 80% of them are interfungible, which allows us to, swap the manufacturing as required. However, we avoid to do that because of quality and cost issues. We are backed up with a very, global level multi-layered raw material and finished goods storage facility, both covering around 1,350 metric tons at a single point of time. It is also backed up with a very strong inventory management system that we manage. 80% of the products that we make goes in the liquid form. So the drums that you can see is a type of packaging material that is being used for our finished goods. Next slide. We are in the process of batch manufacturing system. We do not have any continuous manufacturing system. So either we call it a reactor or a vessel. Two major variables would be there. One is the temperature at which the process happens and the speed of agitation. So the temperature may vary from room temperature to 200 degree plus temperature, and the speed of agitation would be 30 to 3000 rpm. But broadly, the formulation is done strictly as per the SOP. In process QC checks are done, and then after final QC check is done, the material is sent to the finished goods after due packaging. It is noteworthy that 99% is an average yield that we get. Only 0.5% to 1% would be the yield loss. So there is no byproduct coming out of our system. That also helps us to maintain our load on the effluent. Next. As described in the first slide, Neochem today is a performance chemical company strongly focused on four key chemistries: polymers, surfactants, silicons, and bio-based esters. And amongst these four chemistries, there are certain, sub-chemistries through which, we cater to more than 350 plus formulations. So rather than going into the chemistries, I will give one example in each category so that the viewers can imagine what exactly our products are like. So in the chemistry, we create dispersants and rheological modifiers. A dispersant is nothing but that allows two immiscible liquids to get mixed well, and the final product remains stable. Or else a powder and a liquid can mix well, and then it should remain stable for the end use of the product. So one such example of a dispersant and rheological modifier comes in the paints. In any water-based paints, you require few water-based chemicals, few additives, and lot of minerals like titanium dioxide, which actually acts as a pigment on the paint. But unless there is a right rheological modifier or dispersant, there is a lot of possibility that the pigment powder which is there in the paint will settle down, and the paint will not be applied uniformly. So our 0.5% or 1% of the product will actually allow the paint to remain, in a right form for a shelf life that its manufacturer will, display. Similarly, surfactants is nothing but a soap. But what kind of soaps? So a very mild surfactant would be used in personal care. A little harsher would be used in home care. But even a further stronger surfactant would be used in textiles as a pre-treatment washing agent. So its job is to remove dirt, allow it to remain in suspended form, to remove any oil impurities which is there in the fabric, etc., etc. So there are more than 300-400 types of surfactants, but Neochem is purely focused on the additive side of the surfactant, and it is not producing any surfactant which are commodity based. Silicons and bio-based esters. Last slide, please. Silicons and bio-based esters are two important features where the actual value addition over a fabric happens. So silicon does the silicon, gliding effect on the fabric, which is a key decision maker for any person who is buying a fabric because of its feel. While the ester, has its role in improving the overall feel of the fabric from within. Broadly, esters were made from animal fats or mutton tallow so far, but Neochem has an early mover advantage on creating a completely bio-based, esters coming from vegetable oils like palm, soya, coconut, castor, etc., etc. By doing this, not only we are trying to, produce a very eco-friendly product, but also we are trying people to move away from animal cruelty in terms of the product being used for industrial applications. Other utilities of bio-based esters are the laundry conditioner that we use after detergent. Also, it also goes as an additive in the hair conditioning applications. Neochem has a very strong focus on creating bio-based products, and that is the reason last year we could do around 25%. Next slide. Although the chemistries are four, but its potential through formulations is so large that Neochem has started and will cater to these 10 industries which have been identified strategically. Textiles, of course, has been our old bread and butter business, and it is going to be a very important part of our business which will further grow. But Neochem is moving now to, moving away from commodities and focusing on only specialty products in the textile sector. Industrial cleaners, Neochem has an entire range of products. Personal care, home care, and paint and coating. These are going to be the three important verticals for Neochem to carve out its medium to long term journey. So, textiles, home and personal care, and paint and coatings are going to be three important, equally distributed business over a period of time. And while the other industries will have products coming out of the chemistries that we have. Next slide. Already the labs have been seen visibly in the video, and the video displayed the labs better than the pictures. But to say sum it up, we have R&D lab facility where we can do 1 kg to 5 kg in the lab, and then scale it up to 60 kg pilot, and then commercial R&D at around 600 kg. So all our R&D experiments goes through a thorough documentation, checks and balances. And broadly, in last 3 years, we could have, our ratio of converting our R&D experiments to commercial products is around 10%, which is a good. Last year, we could spend around 2% of our revenue on R&D. We have full-fledged application labs for textile industry, while the application lab for other industries is work in progress. Next slide. This is a long journey, but I'll try to keep it as short as possible. 1978, the company today got established in a way of partnership firm. 2006 was the year when I joined the firm. At that year, in 2006, our top line revenue was around 35 lakhs per annum. From there till 2017, which was a key inflection year for me as a promoter of the company, where we not only got converted into a partnership private limited company, but also decided to carve out a journey which is based upon professional joining the company and creating a company organization which is beyond the proprietorship mindset. Having decided that, we started investing heavily into the company by getting right people at the right time, also expanding our labs, modernizing the labs, adding capex in terms of our manufacturing facility, adding a lot of warehousing capacity, doing a lot of marketing to convert our white label business into our own brand business, establishing sales and marketing network, and also doing a lot of trade shows, webinars, seminars, and exhibitions all across the world. So year 2019 till 2024 was a period where Neochem had lot of investment done into its own business, and today we are at a place that we feel that it was the right time for us to launch our IPO in 2025. Well, we were just short of doing around 100 crores last year, and we have been moving at an aggressive growth stage where we feel that the foundation of the company is rightly built for a very long growth oriented future for the company. I'd like to speak something about the management. Other than me and my wife, who are the promoters of the company, where I am the MD and my wife is a whole-time director. But broadly, since 2018, we have started, a culture at Neochem which is purely professional driven. Mr. Dinesh Chopra is a non-executive director of the company and the chairman of the board. He joined the company as a consultant first for 3 years. In 2021 he was brought to the board, and then 2022 he was elevated as the chairman of the board, while we lost our old chairman, Mr. Ramesh Makati, who was my father. This also shows that where I could have been a chairman, but we had trust in the professional instincts and the experience. Similarly, Mr. Guha, having worked with Exxonmobil Paints for over a long period of time, he was executive director there. He advised us on the compliance and the corporate governance matters, and today in 2025 he is on board as a non-executive director, while Mr. Falgun Prajapati is an independent director having a rich experience in the HR background, and Mr. Shail Shah is again an independent director having a good experience with a crop science company in finance background. Next slide, please. At operational level, although I take care of the business, but along with me, there is a full-fledged professional team as required in any manufacturing and a marketing company, wherein profiles like strategic marketing, international marketing, channel sales head, technical services head, plant head, compliance head, CFO, and supply chain heads are there as in our senior management people, who are then backed up by their own teams. A company with around 15 to 20 employees in 2021, today we have 64 people on the rolls of the company, while we have another 65 people on the contractual basis. As I said that we have a pan-India distribution network established for our textile business, while we have also set up a distribution network for HPCI, which is home and personal care ingredients in West and South of India. Apart from that, we have already entered 12 countries where we have started repeated business transaction. And as on March 2025, 91.39% of our revenue came from domestic sales, while we were successful in creating just short of 10%, which is 8.61% of export revenues. Going forward, we see that there is a lot of scope for Neochem to expand in the international business also, and we would like to carry on this journey. Next slide. I've already discussed the certificates. So GOTS 7 and ZDHC level 3 are two certificates where 150 and 300 plus products are certified under each certificate respectively. While we have, our plant is being audited by all five certifying bodies regularly year on year basis. To give you some highlights on overall how the industry is moving, the good part is that the industry is expected to grow between 10 and 12% CAGR globally till FY29, of which more than 50% of the share is going to coming. The share will be coming from Asia Pacific, where two major countries, China and India, are the key players. As far as our product line is concerned, we believe that there is a very small overlap of around 20-25% between India and China, while China continues to be a leader in continuous manufacturing products, while India would be a leader where formulations and batch processes is concerned. So we see there is a lot of scope for India to take a share and Neochem in its growth journey will definitely be a part of the overall growth period. Now, how this growth will come? So, I would like to highlight 8 trigger points. Sai, next slide, please. Next slide. There are 8 identified growth drivers. One, particularly for India, tier one, tier two demand is on the rise. Favorable government policies that we have seen that increases the consumption of a common man. Demand for water-based chemical. Neochem is all about water-based products because we only make water-based eco-friendly products. Urbanization is increasing, as well as rural people in India today have started living urbanized lifestyle. A lot of rise in hygiene awareness amongst people. So home and personal care category of products. E-commerce is on the rise. Quick commerce is on the rise. Few examples today, in any bathroom, earlier only there was one soap, but now you will find multiple shower gels and shampoos depending upon how many people are using that bathroom. Usage of natural ingredients. Neochem has a big chunk of portfolio which caters to bio-based products. So we definitely are going to be part of this natural ingredient-based products. Similarly, a lot of product diversification at Neochem and as well as on the consumption part. These are the identified 8 growth drivers on which Neochem will play on its product profile and a strategy for growth. Next slide, please. Before financial overview, Kirin, can we go to the business, strategies? Next, next, next. Yes. So, viewers, there are 6 identified competitive strengths on which Neochem is working today. One is a fully integrated and flexible manufacturing operations for sustainable formulations, enabling customized supply. Another is strong understanding of applied chemistries for diverse end-use application. We believe that we have a team who understands the application, and based upon that, our R&D is being done. Establish long-standing relationship with customers and vendors across end-use industries, and now we are moving our journey towards international business as well. A very strong focus on applied chemistry based R&D. Right now, our R&D since last 3 years have been focused only on 2 categories. One, on how we can replace a synthetic or an animal-based chemistry by a bio-based chemistry. So, a very strong focus on bio-based material. And second, because our customers have a very long cycle of production, how can we reduce the production cycle time? How can we reduce the consumption of water, and how can we reduce the load on the effluent? So we have a lot of products which will do all three, and that these are the 2 major principles on which our R&D is carried out. Established sales and distribution network across India, going out of India as well now, and experienced promoters with techno-commercial experience on the ground, as well as backed up by a strong management team, having been academically educated from key universities across India, and a good experience from other peer industries. 4 key business strategies. Strengthening presence across end use application industries. So textiles, definitely our number will grow, but overall percentage on which the textile business will be part of our total business will keep on reducing. So we are trying to make our end use application more and more diversified. Continued focus on expansion of geographical presence. So already the network has been established. How well we can penetrate in those territories, and side by side adding more territories is a sales and marketing strategy. Commitment to continuous development on innovation and performance chemistries. Again, the bio-based thing. Leverage on existing strategic collaborations and partnership to diversify end use application. So we have identified few companies outside India wherein those products are not made in India. We try and bring those products to India as a distributor of that company, gradually build those volumes and start making those products in India. So here exactly is a model of China plus one strategy, where Neochem is focused on well aligned products and well aligned industry, considering that we would only focus on formulation and batch process type of manufacturing. Investment rationale. Next slide. Summing up what exactly I said, is this slide. Diverse end use application, more than 350 plus formulations, four key chemistries identified and serving multiple industries. Manufacturing, R&D and warehousing all done, all facilities centrally located in Ahmedabad, and all up to the mark, which is, well certified and audited round the year. A very strong focus on sustainable products and bio-based products, and we are proud to demonstrate that we are a zero liquid discharge facility. Experienced leadership with right-minded promoters having a good appetite for growth. A strong legacy over 40 years being in the same industries, and well represented throughout India through distributors and direct sales to international customers. We have demonstrated over 32.16% of revenue growth in last 3 years. EBITDA is moving towards an 18 to 20% guideline number, and PAT is moving towards a 10 to 12% of a number. This investment rationale, all 6 points, makes Neochem a right fit case, for investors looking for a medium to long term growth in a SME company which has a long vision to go ahead. We can go to issue summary first and then talk about finances. So the issue is of total 45 crores, of which 23.9 crores would be used as long-term working capital requirement. 10 crore is a long-term debt term loan to be repaid. Rest is for general corporate purpose and IPO expenses. Uh, Issue starts for retail category tomorrow, which is 2nd of December, and closes on 4th of December. Post issue, the promoter and promoter group holding would be 66.7% and public would be 33.3%. We can go to the financials side now. Yes. So viewers, as you can see that, our total income in terms of revenue has been growing year on year. FY23 we were around 48 crores, while we ended FY28 at 86 crores. H1 numbers we did around 47 crores. Historically, our business cycle is H1 would be 40% of annualized revenue and H2 would be 60%. So people can calculate on the direction where we are moving. EBITDA of the company is improving from around 9% to 15.5% as on March 25. And this year, H1, we are around 18.75%. The EBITDA growth is because of better capacity utilization, better customer mix, and better product mix. Now we are selling in our own brand business more than white label. Similarly, you can see there is a sharp rise of PAT from 2.2 to 9% in 3 years. And this year, H1, we are moving around 11.5% approximately. As I said while I was discussing the milestones, year 2019 to 24 have been a very aggressive investment period of the company. While the business took its own time to grow, but the investment started from those days, and the reflection in the PAT margin only started coming from FY25 onwards. ROCE and ROE are, this is a very inflection year which gives a number of over 40%. But broadly, we feel that we would be somewhere around a comfortable 28 to 32% ROCE ROE levels. The net worth of the company is on consistent improvement basis. FY23 we were around 8 crores, FY25 around 20 crores, and September numbers we were at 32 crores. Similarly, as I said that we were in a high investment zone, so definitely there was a good amount of debt on the books, wherein our debt to equity ratio was around 3.26. But as and how we improved our operations and the margins, as on September, the debt to equity ratio has come down to 1.2. Further, once the IPO is done, it will come down, to much lower levels. Uh, the PNL and the balance sheet is here for display. I would be open for further questions from the viewers. So I think I am done, and I would be happy to answer all your questions.
Okay, so thank you for the detailed presentation, sir. So we'll start with the Q&A session. I request all the participants to post your questions in the comment box. Okay, so we have our first question from Mr. Darshil Jhaveri. He's asking, why was the capacity utilization low since last 3 years? What is the optimum utilization percentage company can achieve?
So Darshilji, as I said in my first slide, that we had a capacity of 8,000 tons, and when we expanded this capacity, FY23 became the base year of the new capacity. So from 8,000 to 22,000 tons was the capex which was done. So naturally, you will see that because of the DRHP thing, we can only present from FY23. So 25% consumption was because of it was the first year of post capex. Broadly, our kind of manufacturing companies would peak around 85% of total capacity utilization.
Thank you for answering that, sir. Next question. So Mr. Pratham is asking, you are managing 350 plus formulations across multiple industries. So what key philosophies drive such product diversification?
So Prathamji, we are in the product line, which is an end formulation, which would be consumed by the end consumer, which will be catered through a distributor. So variety of fabric or variety of home and personal care formulations, depending upon those, the chemistries will remain four, but the formulations needs on to be kept changing. For example, a face wash for summers would require a different kind of moisture management, but a face wash for winters may require a different kind of moisture management. So these kind of tweaking will always happen. So 350 plus is a number, but broadly, the formulations goes beyond that number as well. And year on year, few formulations will, go out of our system, and new formulations will keep on coming. So the overall, the business type is like that, that we will have to live with so many number of formulations.
Thank you for answering that, sir. Next question. So Mr. Ojas Badami is asking, what differentiates integrated manufacturing facility in Ahmedabad from typical contract manufacturers in the market?
So Ojaji, we are not a hardcore, process-driven manufacturing company. We are basically a formulation type of process that we have, and that allows us, a very well integrated and fungible manufacturing facility. We are not having certain products that are subjected to one reactor type only, and if that reactor is not being used by that particular molecular formulation, it will be of no use. So we are not in that kind of a business.
Okay. Next question. The next question is from Mr. Gokul. He's asking, with a broad customer footprint in India and overseas, how do you decide which geographies and customer profiles to pursue next?
So, Mr. Gokul, our B and C category of customers would be broadly catered through our on-ground sales team and the distribution partners together. While the A category of customer, which are corporates, would be definitely catered to directly, and the geographies are decided by the location of the customers. Number one. Other than that, the international business, we have to identify which are the aligned countries where these kind of products are being manufactured. And that is the reason you can see that major part of our export comes from Bangladesh and Southeast Asian and few Middle Eastern countries like Egypt and Turkey. Rest, like countries like Australia or Canada, these are certain network customers that we could gauge in, wherein there is no broad based manufacturing of textiles happening there, but definitely they also have their own presence across other parts of the world, and we catered few of the customers through them.
Okay. Thank you for answering that, sir. Next question. Mr. Nikhil is asking, which of the four categories do you expect to be main growth drivers?
So, Nikhilji, as on last year, our split was like polymers and surfactants were 35% each, and 30% came from silicon and bio-based esters. Our focus is to take silicon and bio-based ester as a major growth driver in next 2 to 3 years.
Okay. Next question. Mr. Darshil Javeri is asking, what is the growth plan of the company? Uh, that is
Darshil
three
bhai,
years.
uh, as on the capacity utilization that we are here, we believe that we would be there around 85% of the capacity by year 2028. Okay, and there are certain limitations on the forward looking numbers, but broadly you can calculate based upon our historical growth rate, which will be now backed up by a lot of groundwork done in 3 years, and also backed up by availability of good amount of funds for our growth. Other than that, in the presentation maybe I've missed, there is a large chunk of land available with the company for a vision beyond 3 years, wherein the land size is almost 10x of the current land that we have, which is 1 hour away from our existing facility, and the land has been acquired for a larger vision beyond 3 years.
Thank you for answering that, sir. Next question. So, Mr. Amit Chaudhary is asking, how do geopolitical shifts influence sourcing or pricing for Neochem?
So, there were few instances that happened in last 2 3 years where there would be a comment from, say a Malaysian government where our palm-based products come, and there would be some knee-jerk reaction by our government. So, because of our consistent R&D, we are always, prepped up by alternate raw materials into our R&D, and we are very quick in terms of the sourcing of alternates. Number one. Number two, broadly, at a business level, practical experience says that beyond uh, a relationship with Pakistan, rest all is manageable, and few hiccups here and there, business moves smoothly.
Okay. Next question. So, Mr. Anurag Saha is asking, how does Neochem benchmark itself against global specialty chemical players, especially in polymer and surfactant categories?
So, Mr. Anuragji, specialty chemical players make a lot of polymers and surfactants. Neochem is a performance chemical player, which will, make, products based on polymer and surfactant, chemistries. So, we will have to be evaluated in terms of our, product line against performance, chemical players. As we said that we are in the business also of white label supplies, we also supply to large global multinational companies, and we feel that our products are widely acceptable, well acceptable, and good to go into the market. So the quality of the product, the understanding of the application is up to the mark at any global level.
Next question. So, Mr. Raghav Datta is asking, with Neochem's strong revenue growth, what is the outlook for sustaining this momentum in the coming years?
So, Mr. Raghav, as you see that the industry is so big and Neochem, has demonstrated a very strong revenue growth, but still the base of the company is not near to saturation, level. We are very, very far away from saturation levels where, we can feel that the growth level may be difficult. So, definitely the growth is going to continue, and that's the best thing that I can say.
Thank you for answering that, sir. Next question. Sir, Miss Nisha Barot is asking, how does your custom formulation capability help secure a long-term sticky customer relationships?
So, Miss Nisha, the point that we are slightly lower in terms of our capacity utilization compared to a very standard chemical manufacturing company is because our product approval cycle is little longer. but that also helps our customer to remain a very sticky for long period of time, because it's a customer engagement that really creates a custom formulation, and customer would always like to stick to a right kind of formulation for a longer period of time rather than shifting quickly because of just price factor.
Okay, next question. Sir, Mr. Samar Dalal is asking what structural drivers contributed to the recent expansion in the EBITDA margins.
Three main factors: better capacity utilization in last 3 years compared to what was there in FY23. Shift in the customer mix, from white label customer to brand customer. And the third is, more and more, formulation product being sold rather than intermediates being sold. So the value added products are being sold more. So these three are the reasons.
Thank you for answering that, sir. Next question. So the next question is from Mr. Shankar Panchal. He's asking what mechanisms are in place to keep working capital efficient while dealing with the distributors, overseas customers, and raw material swings.
So we are, yes, in a little long working capital cycle business, but the overall industry is like that. And as we have moved from white label customers to our own distribution network, the first couple of years went on to offer them a little more credit and also maintain a lot of inventory. But now that there is a lot of trust amongst our brand, the long working capital cycle will definitely taper down gradually to an industry standard very soon.
Okay. The next question is from Mr. Shreya Desai. Uh, she's asking how do you plan to scale your presence in high growth markets such as Vietnam, Indonesia, and Turkey?
So Vietnam and Indonesia are focus countries. Turkey is not a very focused country for us because of its long payment cycle. But Vietnam and Indonesia, we have very good distributors along with us, and our team goes very regularly over there with our own service team being there. And it is through a good distributor who will be your brand ambassador for the country. We would like to take better and better share from that markets.
Okay. Next question. Sudeep Shastri is asking are there plans for forward integration such as contract manufacturing for multinational brands?
So Sudeepji, the reason of buying such a large chunk of land, while we are still at approximately 50% of our capacity utilization, is because we have few products which are the backward integrated products for multinational FMCG brands, where we can do both backward and forward integration. So that is the logic, wherein Neochem has a lot of futuristic trigger projects.
Thank you for answering that, sir. Next question. So Mr. Vrutesh Nair is asking, are there plans to establish overseas warehouses or blending units to serve international customers faster?
It's a fantastic question. And when I was speaking about Vietnam and Indonesia, we have identified few partners where they have their own blending units, where Neochem India factory would be sending the concentrate products, and which can be further blended as and how the volumes of that country will demand, to save a lot of time and freight cost, and for speedy delivery.
Next question. Mr. Subodh Joshi is asking, with a strong presence in textiles, how are you reducing your exposure to textile industry volatility?
So, Subodhji, as you see that till 2022, we were 100% in textile business. Last year, we ended at 85-15 split, and this year, as per H1, we are at 77-23 split. Going forward, we see that textiles business would be around 40-45% of our growth numbers, while the rest will come from other industries. Other than that, we have moved away very quickly from highly commoditized textile chemical area, and we are now only catering to mid specialties and specialty products, where price volatility is not a concern, but the quality and customer stickiness and customer engagement are the key decision making factors.
Thank you for answering that, sir. Next question. Mr. Nishant Sharma is asking how important are application labs in closing sales cycles for industrial customers?
Extremely important, sir. We are in the business of applied chemistry, so our R&D and application labs both are considered to be a part of R&D only. So that is the main epicenter at which Neochem brain people at Neochem work upon, and that is very very crucial for us.
Next question. So Mr. Darshil Javeri is asking what is leading to growth of margins and will it sustain a big jump in PAT margin?
So, Darshilji, overall performance chemical industries, any performance chemical industry across the world would move towards a approximate 40% material margin, 18 to 20% EBITDA, and 10 to 12% PAT margin. These have been done by a lot of peers. Neochem is on its journey to do it. And the substantial big jump is one such inflection year where the efforts of last 3 years were started getting reflected in the gross margin and EBITDA level, but the PAT margin had a lot of pressure because of the certain employee cost, certain trade and marketing cost, etc. Now the capacity utilization is better, better margin products are being sold, so definitely PAT would be reflected.
Thank you for answering that, sir. Next question. So Mr. Yash Mistry is asking what is the R&D process for prioritizing new formulations and identifying emerging application needs?
So remain very strong on the ground, understand what exactly customer is wanting, but what your customer is trying to get from your customer. So that is number one. Secondly, keep focus on key factors like sustainability and bio-based thing into our product line, and always try to keep yourself 2 steps ahead of in terms of R&D, while you should be ready at a time when your customer is really looking forward to get something new.
So the next question is from Mr. Nikunj Patil. He's asking how do customized formulations contribute to your overall margins?
So customized formulations keep ourselves differentiated. They also, keep our customers more sticky and engaged with us for a long period of time. And that is where, we offer a customer a good stability in terms of pricing, where they require more stability of price rather than, price reduction. And that helps, on maintaining sustainable growth.
Okay. Next question. The next question is from Mr. Shankar Verma. He's asking what led to the significant improvement in PAT margins over FY23 to FY25.
So Shankarji, I've already replied this twice, but one more time I would like to reply is that there was a very very heavy investment done by Neochem in multiple areas like employees, marketing, sales and marketing, trade distribution, exhibitions, capex, etc., etc. So naturally, the PAT margin was not reflected in FY23 and 24, but definitely with a stronger capacity utilization and better gross margin levels, the reflection in PAT is being seen.
Okay, next question. Uh, the next question is again from Mr. Shankar Verma. He is asking how are fluctuations in raw material costs managed?
So Shankarji, we deal with over 15 categories of raw material, which is then further divided into more than 300 products. So it never happens that one particular raw material, at the same time all raw material cost will be volatile. So definitely there would be some fluctuations in raw material cost, but there is a good industry practice that if it goes beyond the control, the customer is being communicated right in time, and necessary cost increases passed on to the customer.
Next question. The next question is from Mr. Darshil Javeri. He's asking if we have an order book, can we share the order book and execution timeline for the same?
So, Darshil bhai, we are not a very project or EPC based kind of a company. We are a manufacturing company. So, we do not have an official order book kind of a system. So, broadly, we stock our finished good based upon historical sales done to our distributor and customer. And also, there is a constant connect with our team on the ground and the distributors, so that we can get a right kind of a forecast. So, and broadly, we keep very strong inventory line where our tat for routine products, regular products, which are standardized now, is less than 3 working days. So our execution is quite speedier.
Thank you for answering that, sir. Next question. Sir, Mr. Chaitanya Deshpande is asking how do you position yourself against competitors in the HPC and industrial cleaners segment?
So, Mr. Chaitanya, our positioning is very, very clear. We do not want to be part of extreme commodity products. We will be always in mid specialties and specialties, and major focus coming from bio-based category of products.
Thank you for answering that, sir. Next question. We have
Yes,
again a
by
question from Mr.
if the price rise is very, very high, we can definitely communicate with the customer, and the overall industry practice is such that we can pass it on.
Okay. Yeah. Next question. Sir, Amardeep Dosan says all the best for the IPO.
Thank you so much.
Yeah. Bimal
Thank,
Gandhi says looking forward to the IPO. Yeah. So, sir, I think Mr.
thank
Ojas
you.
Badami also says this. Yes. So, I think we have covered most of the questions. So, thank you and all the best for your IPO, sir.
Thank you so much, Sai. I would also like to thank Roshan Bhai and his team for being present over here. Thank you. Thank you.